Good morning, everybody, and this is your S&P 500 day trade setups for today. So we did try and, let's not call it trying to break through the triangle, but basically the triangle's still intact as far as I'm concerned, and you can see the buyers came in off the bottom here and rallying to the top. So you can more than likely just use that as bottom of range, and these two levels that we're at the moment is top of range. So if you look to the left, you can see there's a lot of what was support and what has been used as resistance as well the whole of last week. So that is a critical area. So that's 42.57. Sorry, that's actual price. It's 42.65 and 42.82. Those are the two areas we need to pay attention for a break to the upside. So trend is down on the 8 hour. So that's the way we should be trading this. Right now on the 3 hour, we have diversions forming. You can see there's the previous high. Here's the current high. Look at the oscillators higher than the previous one. So it does look like you're more than likely going to get some kind of rejection here. Remember, non-farm payrolls today, so I wouldn't be touching this at all today until we finished with non-farm payrolls. Then moving down to the hour. So you can see a pretty strong move yesterday off this level straight to the top of the range. So that was a 3% move. So that's significant in itself. So unless somebody knows something, which is more than likely, which is driving it up, we may have something coming from the Feds which is going to push this higher and start building a template for a move, a continuation move to the highest, to the upside. So right now, sit on hands. I think you've got a fairly strong area of resistance here, so it's going to take quite a bit to get through there. So the Feds are going to have to come up with a very good song and dance for us to get through there. Otherwise, we're more likely just going to roll over and come and test the bottom of the range again. I'd almost get rid of that trend line. This trend line I would keep in play because it is critical. If we break through that, that's also the start of a move to the upside. Watch your moving averages on the hour. Wait for the Feds, which will be late on tonight in my time. But wait for them to come out with their press release and see what they have to say. More than likely going to say they're going to raise interest rates and maybe just give a fixed date, or alternatively they're going to drop one of the interest rates. And if they do something like that, then we'll move. If they're going to raise and give a fixed date, then we're going to drop. That's kind of what it all plays out to at the moment. So anyway, this is a clear sit on hands. Let's just have a look at what yesterday gave us. Pretty decent bounce off the level. I would have expected us to reject this area, to be honest. That area there, which we didn't. We sort of bounced through, came back, and then continued to the upside. So as far as I'm concerned at the moment, we're range bound, and that's where you should be trading this. So you should be looking for some opportunity to sell off up here. And the only way that that's going to happen is a break of that range. So break and retest of that range. So break below 42.50 and a retest of it will give you an opportunity to get a short. And that short is pretty much going to, I don't think it's going to be something that's going to make you a lot of money. It's going to be very much short-lived, excuse the pun, and probably come back into this area here, which is the 50% of the Fibonacci, which is 4200 or 4210 at the moment. So 4200 is also a critical level. If we get a weekly close below that or a rejection of that, we have some pretty serious downside opening up. But for now, this is kind of we're just hovering around here, and I think we're going to hover around here for most of the day until the Feds come out with whatever song and dance they have to share today. Anyway, that's kind of my view. Sit on hands, wait for the Feds, and we'll catch up with you tomorrow. Cheers for now.